Good morning, treasurers. This is your host, Parthish Shah, co-founder of Knight Fintech, and you are listening to Knight Snippets. The first trading day of the new fiscal year, and still the COVID-19 worries remain. We are yet again facing the same challenges which we were facing last year. But with all new enthusiasm, here is all what you need to know before going into trade for 5th April 2021. In the international market, US 10-year is trading at 1.72 percentage points and 30-year is at 2.35 percentage points on Friday. President Joe Biden has announced $2 trillion infrastructure plan to boost economy and job market. The plan is now under consideration for debate in Congress. In the crude oil market, OPEC Plus surprised the market on 1st April meeting by easing the oil production cuts. OPEC Plus decided to add more than 2 million barrels per day over the next few months, betting on rising demand. An increase of 0.35 million barrels per day in May and June each, and 0.45 million barrels per day increase in July. At the same time, Saudi Arabia will ease its voluntary 1 million barrels per day cuts by July. This increase in oil production is a clear vote of confidence on increasing demand and optimism on global economic recovery. This also shows the OPEC Plus nations' eagerness to increase the supply, thereby supporting their weak economies by oil revenue. Crude is trading at $64.51 per barrel right now. Crude's short-term range seems to be $63 to $66 per barrel. Knight's crude position, we are long at $60 per barrel and still holding long positions. In the currency market, dollar index is at 92.94. DXY has tested 200 daily moving average and has fallen from 93.50 levels. DXY's today's range seems to be 92.73 to 93.16. We need to see now how DXY behaves at 93 key level for further movement. Key levels to watch: 92.45 and 93.43 on a weekly basis. USD CNY or Chinese Yuan is at 657. USD INR with a high of 73.58 closed at 73.12 on Wednesday. USD INR's range for today seems to be 73.30 to 73.60. The 31st March move was surprising, but for the longer run, signals are clear that the USD INR will trade towards 73.50 to 74 in a very near term. In the domestic market, 515 GS 2025 closed at 570 versus 567 the previous trading day. 585 GS 2030 closed at 617 versus 614 the previous trading day. RBI has announced April to September borrowing calendar on 31st March 2021 late evening. Government is borrowing 7.24 lakh crore in the first half of FY22 out of 12.06 lakh crore scheduled borrowing. State borrowing program is not out publicly yet. The 7.24 lakh crore on 12.06 lakh crore is approximately 60% of the total borrowing in the first half of the year. This is a clear signal that the RBI understands the rising interest rate scenario and wants to wrap up the borrowing as soon as possible. Major threats to the Indian bond market for FY22 are global reflation. Number 1, global reflation trade and rising US yields. Number 2, liquidity normalization in India, increasing reverse repo by 25 to 50 basis points and repo by the same amount in September to April 2022. Sticky higher inflation, that was number 3. Number 4, mammoth borrowing program. And number 5, improving global and domestic economies after COVID-19 vaccination drive and increasing demand for credit. There is an RBI MPC policy meeting on 7th of April. Our night expectations are status quo on repo and reverse repo. Accommodative stance will be maintained, no change. Reiterating the fact that the RBI will continue to support the market as long as we need it. Given the announced borrowing calendar may increase the yield by 2 to 3 basis points, we advise our clients to carry out HTM AFS shifting after 7th of April RBI MPC policy, as it is expected to be a yield cooling event, reassuring the market on the OMOs. Night advice: the last trade of FY21 was to book profits and close the trade of 515 GS 2025 at 562. Again, the decision was apt and accurate. That's it for today. You were listening to Knight Snippets with Parthish Shah, co-founder of Knight Fintech. See you tomorrow with a new episode of Knight Snippets in the new fiscal year.